Good morning. It's 10:18 a.m. Pacific Standard Time, 11/19/2012. Once again, happy Turkey Day. We were talking about a Thanksgiving rally because we were deeply oversold in these markets in the short term. That's exactly what we had said the prior week. One of the things that we would like to update you on this midpoint update is that from a very deep oversold correction, we get to where we get into bear market territory and they get relief rallies. This is the Dow Jones update, testing the 10-day simple moving average. The Nasdaq composite is up right now, 45.88 handles, and every one of them look from a deeply oversold. As we said, that we were looking for this to happen last week, but they did not like the talks that were happening, obviously. We were deeply oversold in the very short term, and we have a pop to the 10-day simple moving averages. This is what happens when you enter into bear market correction. This is what we were talking about, getting those pops off of the bottom deep. And remember, it's short term, deeply oversold. You get relief rallies that are tradable and you sell into resistance. Nasdaq composite update will look the same. Every one of these that we had pointed out over the weekend and last week was that in the short macro, when we got down on 11, we were very oversold down here on the 15th of November. Then we came up and we've come up, and short term, you start with the gap up from deep oversold territories and bear market corrections within the broader bull tape that once was the Super Bowl in 2012 had entered into bear correction, and you get these bear rallies. This is the Nasdaq composite. The S&P 500, when we broke the 200 simple day moving average, we got deeply oversold. And remember, I said oversold in the short term. That when we broke the 200-day simple moving average, now we are testing it at the wall of resistance within we call it a relief rally. We were looking for this relief rally to start last week off of the news. Congress is going to be out over the holiday. We're going to be doing a special segment on how corporate of America, those are all the CEOs, they have a fiscal cliff outside of the U.S. economy fiscal cliff, and it's called CapEx spending. Nonetheless, what used to be support where it broke down has become new resistance. We were very short-term oversold on every one of these things, and the bear funds that we featured over the weekend went to their wall of resistance, and the bull hit the bottom end of the support for a rally up. We will continue to look at all of those bear ETFs because they had the biggest moves in the last month at the wall of resistance when we're putting in the wall of support from a deeply oversold condition. This is a short trading week. A lot of people will remain on the sideline. Congress is in recess. They'll come back next week. The Republicans don't want to be the ones held accountable for it. And more of them are going to have to agree with Obama, because if he lets the tax cuts expire across the board for all Americans, he's still going to get his tax hike. So he can't lose. The problem that we have in the very shorter term is, what is the recipe for this economy? Does it have to go off the fiscal cliff? No. Would it grow at a lower contraction? It would stay within a range in 2013. 2012 was a great year. They're trying to make it where we entered the bear territory in a lot of these indexes. S&P has got the wall of resistance. The up move is to be selling into resistance. There is no resolution. Look, deep bear trends that we've entered into have bull relief rallies. Do not read anything more into it than what it is. This is our worldwide update, our MMT update, and our MMT school update.